Hi, we are Sales Tax and More, and today we would like to talk briefly about the cardinal sin of sales tax, and that is tax collected and not remitted. Our salespeople have been talking to a number of companies recently that have found themselves in this predicament. In this day and age, it's really easy, because of automation, to mistakenly turn taxes on. We're finding more and more companies haven't set up the ability to file returns, or the person who set up the registrations left the company before the returns piece was set up. But for whatever reason, sometimes tax collection goes a couple of months or even years unnoticed. We once spoke to a company where this was going on for 10 years. The reason why this is the cardinal sin is because it's generally not the seller's money. It's generally either the customer's money or the state's money. So when it doesn't get remitted to the state assumes that this is unjust enrichment, which is a nice way of saying stealing or fraud. Sales tax, like payroll taxes, are generally trust fund taxes. In other words, a seller would collect the tax in trust for the state. So if the money is not turned into the state assumes the seller is stealing this money from either their customers or the state. It is actually one of the few areas where people can end up going to jail. Tax collected, not remitted, is a serious issue. Generally, there's got to be some sort of intent to give rise to jail time, but not for criminal penalties, which are in addition to the normal civil penalties and interest. In a case where it's been going on for 10 years, it's hard to say someone didn't know something. Very important that as soon as you realize you've got tax collected and not remitted, that you get the tax remitted as soon as possible. We often suggest a voluntary disclosure agreement, a VDA. In a VDA, you go to the state and you say, hey, we weren't aware of this. We just realized it and we want to become compliant. The VDA process often waives or reduces both civil and criminal penalties. This was a strategy used with a company that had been doing this for 10 years. The interest and taxes had to be paid, but the penalties were waived, and we worked out a 5-year payment plan. The backstory was the bookkeeper didn't know about sales tax and kept moving it back to the general ledger. It wasn't discovered until after she was let go. It is very important that as soon as you realize you have tax collected, not remitted, that has been going on for a while, that you reach out to someone like us. The benefit of reaching out to someone like us is we can approach the state on an anonymous basis. Whereas if you're calling the state yourself, it's hard to remain anonymous. This is something that's very serious. Certain states like Florida send people to jail or impose large penalties frequently. You can Google Florida sales tax in jail for examples. In summary, it is not uncommon for tax to be collected and not remitted. Sales tax automation makes it very easy for mistakes like this to happen. Catching the mistakes early is key, and they're relatively easy to fix when found early. Having a system of checks and balances can reduce the time it takes to discover an issue. It can be as simple as making sure all of the tax collected is actually remitted at least quarterly. If you need additional information, please reach out. We are very knowledgeable about this subject and are helping quite a number of companies get through it. Thanks again for your time. We hope to see you again shortly. Bye-bye.